Let's take a look at the news. I'll bring up the screen in just a moment. Give me a second. We are live. We are live. Yes, yes, yes. All right. Perfect. Perfect. All right. Let's jump in. Let me see the chat. Make sure everything's loud and clear. All right. Let's get into the risk disclaimer really quickly. We understand there's risk in trading. Please don't always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the deal. All right. Let's get to the charts. Everyone see the screen? Yes, yes, yes. Fantastic. Here we go. Paul in the house. Dennis, Linda, Gary, Dustin, Joseph. Let's see here. R.A., Neville, Chris, Lamont, Denise. Nice to see everybody. Hello, hello. All right, good. Here we go. Let me look at the real-time news. Financialjuice.com. Interest rates decision. Actual 0.5. They raised it 25 basis points, as we expected. Okay, so they've been sitting at 0 to 0.25 for a while. Let's go to Forex Factory right here and refresh the calendar. It should be right as expected at 0.5. So it's going to be now the window between 0.25 and 0.50. This is what the Fed expected. You can see the countdown tool as well showing the same thing if it actually sticks to the same date. Let's refresh this. So officially, today's rate decision, 0.25 to 50, that's where they are. That's where it sits, and that is what the real-time news is indicating. Inflationary pressures remain high due to supply difficulties and the pandemic. Also read something today that the producer price index is showing one of the highest jumps in 12 months, meaning that businesses are going to see higher prices. Guess what? They're going to pass it on to consumers. Guess what? That means inflation is here to stay longer. So even the Fed raising rates doesn't change anything. We've talked about this. Implication of Russian war is highly uncertain for the U.S. economy. Meeting shows employment 3.5% by end of 2022, 3.5% by end of 2023. All right. Treasury confirms that Russia is not barred from servicing bonds. All right. So I'm just going to keep this real-time news up. We'll take a look. Rate decision is as expected. Let's wait just a couple more minutes. Let's see what the real-time price reflects on Forex. Let's take a look at the stock market. Anything that jumps out. I'm going to go into, let's go 1 hour chart here for the SPY. Now, we were trading as high as, we have a recent high here over the last couple of hours. So when we started today's open, we gapped higher, closed up in the hour around 434. We're retreating off that. We do have some intraday gaps right here to look to fill if we're going to see a little bit of a sell-off for the day. Of course, what this candle looks like by the end of the day is going to be really important to keep an eye out for. Right now, this is not looking very promising, right? So I don't know if the market was expecting the Fed to be like super cheery and uplifting today, or it's just going to create a lot of volatility, because what it may end up doing, in fact, is we have this wick high. Perhaps it comes down for a retest of the gap area, and then maybe just forms a big indecision candle. One thing we haven't seen the market do for the last couple of weeks is we have not broken a high, we have not broken a low in the S&P 500. So we might still be trading inside this area, which is where we have to watch and see, is it going to continue to get worse before it gets better, or is there a relief rally upon us? This is what we're going to find out. Okay. So I'm just going to take a look at my portfolio really quickly. I have had a little bit of P&L swing in stocks. I was up all morning. I still am up a decent amount, but I'm getting some fluctuation on some of these prices. And let's check the Forex world. We'll look at 205 to see what the market is doing. A couple $100 swing in P&L. CAD Swiss is still up on the day. Swiss yen indecisive. Euro Swiss is hanging tough at the highs. Euro dollar's hanging as well. Anything on pound Swiss? Pound Swiss is just above break even. Let's see here. Aussie, New Zealand, anything there? Still, plus about 100 and some pips on that trade. Aussie yen looks like it's trying to push back up to the highs. We'll see if we hit like 86 and change on Aussie yen. I'm looking to sell those highs on a daily, weekly time frame. I have a pending sell on Aussie yen around 86.30. All right. So there's our SPY. Just going to take a quick look at my trading room this morning for equities on demand. We have a big list of stocks I want to take a look at and just kind of review some of the prices. We'll do this later on. I'm not going to jump into this right now. 205. I've got a real-time update here for currency strength. Let's see if there's a big jump on anything. So let's refresh. Let's go to right now. Real-time news in the last 5 minutes. You're seeing a dip in the Aussie, a dip in the New Zealand. You're seeing a jump in the euro and the CAD, you're seeing a bigger jump in the dollar, a little bit of a jump on the Swiss, and the JPY is still the weakest of the morning, or day, I should say. So all the volatility started to kick off here around 3 a.m. Eastern time, which is the Euro Open, London session open, and volatility's kind of expanded in the same direction. So Aussie's been strong, except for the last 5 minutes. We're starting to give back a little bit and rebalance. So does that really change things? Not necessarily. What I want to look at right now is let's go to dollar Swiss. Okay, dollar up above, that's fine. Euro Swiss up above, that's fine. Pound Swiss up above, that's fine. Aussie and New Zealand Swiss are retreating a little bit. Swiss yen is going to be mostly the same and kind of unchanged, as both of those were weak today. And we would be looking at a little bit of a dip on Aussie dollar, right? If the Aussie's dropping, the dollar's rallying, you're going to see the Aussie dollar starting to show red. Same thing with New Zealand dollar. Dollar CAD might be climbing back off those recent levels. I did get stopped out at plus 30 on the dollar CAD, and I want to reassess that position as well. So we'll take a look at those charts. Okay, so let's just flip through some currencies. Dollar index right here. Dollar index long wick to the south. All right, now, like I said, this is really important. I know that we're trading today. We got this little bonus session at 2 o'clock. This is not the end of the day, right? Wall Street's still going to open for another 2 hours, close at 4 p.m. Forex is still open till 5 p.m. Look and see what these daily candles look like. End of the day for the SPY, end of the day for the DIA, for the Qs, S&P 500, the Dow Jones, volatility. We want to see where all these things end up. Look at oil today, right? So a lot of times FOMC, especially with a rate decision and a press conference combination, which Jerome Powell starts speaking at 2:30, a lot of times these are, very noisy. There's a lot of intraday volatility. But at the end of the day, look, you have to pretty much ride this thing out for a couple of hours, right? Two more hours, Wall Street closes. What do the markets look like? 3 more hours, Forex closes, rolls over to the next day. What do the daily candles look like? Dollar index. If this is, of this recent breakout point, if this is a intraday, pullback in order to start another bounce on the dollar, this is what I'm looking for. I would turn a little bit more bearish on the dollar if we break back below 12,240 to look at dollar weakness. But right now, this is postured to continue to see some dollar strength. One thing we want to take a look at as well is the TNX, which is the 10-year Treasury note, which is trading up to fresh highs, 2.20. Again, on the daily time frame, a new high on the day. This is really interesting. Okay. Again, this is kind of a fixed benchmark, a fixed income benchmark to see what the borrowing rates are going to be at. We might see that this is creeping up into mortgage rates and things like that. Is there going to be any type of slowdown? I mean, realistically, it's like we have to think that, we've probably heard the phrase stagflation thrown around as a potential threat to, stagnant wages, high inflation, slowing GDP. Stagflation could really be like the market's reality, and it's not a good thing. So again, I think that makes it difficult to get to new highs. I think it makes it difficult to get back to the same highs we just had in early 2021 and certainly last year. Definitely in tech. When you saw those highs really cement themselves back in, late November, December of last year, we have a lot of stocks that will probably take months and months and months to get back to those levels. What was going to look at here? Not stagflation. There's something else I want to take a look at. 10-year note. Oh, the mortgage. I want to look at mortgage rates. Mortgage News Daily. Take a look at the top. The 30-year average rate. This is up 0.2% since I looked at this a week ago. Right now, the average 30-year mortgage fixed rate is 4.44. Wasn't that long ago, this was under 3%. So as the 10-year is rising, this does have a big impact on what, housing looks like. Could there be a slowing in real estate? Possibly. The thing that's keeping elevated real estate prices right now is lots of demand, low supply, low inventory. So the prices of houses are still expensive, but borrowing costs are certainly going up. So it's going to make it harder and harder. I think that net is shrinking of the amount of people that can afford to, have a $500,000 home at, I don't even know what the median home price is right now. Probably up like 15 to 20% since last year. I'd probably say the average median home in the U.S. is like close to 350, 360. And if you're all of a sudden getting a 1.5 to 2% higher borrowing rate, that does pinch the pocketbook a little bit. Not to mention inflation, right? All right, dollar yen getting interesting. Sure, dollar yen's probably up to some fresh highs, right? Dollar yen sitting at 118.87. This is why I said we're going to test the level at 118.45, 118.40 because I didn't think that was necessarily going to be the top, right? And I'm glad that we said it wasn't the top because I don't think it is. Now, I like this trade overall. Okay, I'm taking a small sell trade there. I'm also going to take a look at the 120 level. I'm not going to lie. I am fully prepared to build this position, right? We could have this running up for the week at 120, and over the next couple of weeks, this whole thing, declines, goes back. We have a great pocket trade back to 116 and change. I'm still looking for this to find this daily exponential moving average around 113 and change, which is right now about 500 pips away. And the fact that we're going straight up, I'm looking for this to start topping out and then start working its way back down. Now, where do I think this would also get some timing? If you're watching dollar yen, you want to watch dollar index as well. Because of dollar index, look at how long this wick is right now. This dollar index chart is suggesting that the bulls are pushing the dollar pairs higher or pushing dollar strength higher. If that is the case, dollar strength continues to work its way up towards multi-year highs. We have resistance up here in 2015, 2016, 2020. If the dollar works its way up there, that's the area that I'm looking for a decline in the dollar. But until then, I would say dollar strength is pretty solid right now. Now, the only way that changes is if today's candle, when the dust settles after this news right now, after the press conference, if this candle is red, okay, if this candle is red and pointing to the downside and we're potentially closing back inside this level at 12,306, if we're down below that, then I think that we might be looking at a near-term top and a fake out on the dollar strength. And this is the dollar is going to get sacrificed for something to push bullish in the stock market. All right, so let's take a look. SPY giving back all the gains. All of the gains today. It was up like 1.6, 1.7%. It is back down to flat. So a lot of volatility to the downside. This is not looking very promising. The market's not loving what they're hearing right now. Here you go. So let's look at all these breaking news highlights. Median forecast shows rates at 1.9% end of 2022 and 2.8 end of. I don't know where they get 1.9. I mean, they raise by increments of 25 and 50 basis points, so 1.9 means whatever. We can do the math and see, are they planning on raising rates? I want to see, is there a plan? I mean, over the next 6 months, 7 months, 8 months, like what are the expectations for the Fed? How many rates are they looking at raising? Is it 6 times, 7 times? Like, how the heck do you get to 1.9%? Let's see here. Expected to be 2.8 by end of 2024. Long run 2.4. Majority of Fed officials see as many as 7 rate increases in 2022. There you go. That's what I'm looking for right there. So right here. 7 rate increases into 2022. So we talked about this week in Flex, Goldman Sachs. Oh, whisper in the ear of Goldman Sachs, and they all of a sudden make it come to fruition. Okay, even though Powell's probably the one whispering that. So 7 rate increases. Well, if we take a look at this CME watch tool, we have 1, 2, 3, 4, 5, 6 more months, right? So on this, I mean, as far as planning this out, we have 6 more months. If we're looking at least 6, that would be 7 for the year because we just raised rates today. So let's say that they do it by 25 basis points. So 25, another 25, let's just add it up. So if we have 0.25 today, and we have another 1.5 over 6 meetings, okay, plus 1.5 over 6 meetings, that puts us at 1.75. That's going to be the window between 1.75 and 2% by end of year. Now, is that enough to really thwart and stop inflation and runaway inflation? Probably not. But it's enough to maybe stay with it. Maybe it doesn't let it get worse, right? I mean, again, there's a lot of things the market might be grasping onto for any type of positive outlook. If inflation doesn't get worse, then maybe that helps, But I don't see a lot of things that the Fed can do that's really going to change this at all. But it could be argued that, the market's wanting something positive. The market is desperately wanting something to be bullish and wanting a short-term rally, wanting some recoveries. But today it doesn't look like that day so far. Now, maybe this changes over the next 15 minutes. Jerome Powell has a press conference at 2:30. I don't know what that guy's going to say to all of a sudden change this daily price action. Right now, this does not look very good. We had a nice rally yesterday. We started off today on a high note, and the market is not digesting this very positively. Okay, so let's take a look. Let me take a look at some crosses here. So dollar Swiss. Okay, dollar Swiss is at 94.54. We're now nicely into the open. I should have some nice running trades, stacking those orders up. Might have had some higher spreads. Let me see where I'm filled at on dollar Swiss. So I did stack up some orders in some profit, getting them all stacked up, and still going to run. And hopefully we will see dollar Swiss run into some bigger profit levels. Weekly time frame. Yep. So I'm looking at current price stacked up about another 200 pips or so of bullishness on the dollar Swiss. And that's just a simple 18127. We have a really nice previous structure at like 9650. We've got harmonic levels back there. I'd like to see this also make a 5-wave move to get back to 1.00. So for the foreseeable future, you're going to continue to hear me talk about being bullish on the dollar Swiss. And right now, this is looking great. This is if you follow my monthly or my weekly newsletter, pulverreport.com, there's a newsletter. And this is one of my trades that I sent out probably 2 months ago. And my decision was to buy dips and my decision was to buy breakouts and surround this entire instrument, because if we had dips I want to buy, if we had breakouts I want to buy, and my profit target is up here. So this is what's paying us out so far. Entries from 92.50 all the way to 9400. We have been filled on all those trades. So if this gets to my profit target at 96 or 96.50, this is going to be a nice little chunk. Let's say we get to 96.50. I'll be conservative and say 96.50. So that would be 350 plus 300 plus 250 plus 200. That's 1100 pips just on the breakout trades. If you got filled on any of these dips below 9100, which when at the time of this trade, I bought it at 91.88, I did not get filled on anything lower than 91. So where I got filled lower than 91 was way back here, back in May of last year, which traders were with me in the flex room. We were in on that trade, but recently we have not had a breakout below 9100. But our breakouts to the upside are looking really good. So let's run with this dollar Swiss. Let's enjoy it. Let's take advantage of it. If we get pullbacks, take a look at this. If we get pullbacks on dollar Swiss, I'm still buying dips. Okay. I'm going to buy dips. I'm going to buy dips. I'm going to buy dips. I'm going to stay long in this pair. If it keeps going higher, 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 I'm going to run with it and stay with this thing till 96, 96.50. So that should be looking pretty good. All right. Dollar yen, same thing. We just got filled on a retest. It's going up. It's at 118.92. We're starting to get a little scream to the upside. We've got to be, okay with this. I mean, just selling it at 118 was a good starting point. That was also 2016 highs, and it's blown up through these levels. But it has left some breadcrumbs. We've got pockets. We've got pivots. We have all sorts of great stuff to the downside. Once it's going to correct, we have an awesome bar count as well. So let's be patient. We got to trade small. We got to level ourselves into it, and we will be fine. There's also a really nice bar count on the 15-minute chart. Wow, we have 500 bar. Wow, this is crazy. We have 500 bars on the 15-minute chart. That is kind of obnoxious. So I wouldn't be surprised if, and this is no joke, I wouldn't be surprised if this market finds a way to stall and then maybe work its way back down. The reason I'm not going to jump into this trade right now, I sold it at 118.45, okay, is if on the 15-minute chart, this is a small enough time frame that give this thing, an 8-hour session, and this is going to be up here, right? So it's a moving target, and it's much more aggressive than it would be if I'm just sitting at that daily EMA that's 500 pips away, and it's barely going to inch up. The 15-minute will be much more aggressive to price. So I'm not going to, position myself aggressively based on a 15-minute time when the daily chart's really what I'm after. Okay. All right, Euro Swiss. Big Les is saying Euro Swiss will take out the gap. You mean dollar Swiss, right? Euro Swiss. It's the exchange is not 9,400. So we're trading at 103.70 on the Euro Swiss. I'm looking at Euro Swiss to continue to head higher towards 106. I'd like to see if the bulls can come after and score a point at this. This is 106, 106.10 roughly. We have a yearly pivot around 106.20. We have a pocket here at 106.30. We have previous support around 106.70 to 106.90. I would love to get the Euro Swiss to head off of these parity lows, backside of the trend line, all the way up to these levels. Let's get a big bottoming formation like a head and shoulders or a crown, and we can buy some more, position ourselves. Look at this thing going back up towards 109. So this might be, one of my kind of swan song events for the year if it plays out the way that I want. Right now, my first phase, and traders know this in my flex room, my first phase is let's get this back to 106, and let's take a chunk of profit. A big chunk of profit at that. Okay. All right. So take a look at the currency strength chart. Is 220. We'll have a couple of updates here. So dollar stronger, yen is dropping, Swiss is dropping. Aussie is stabilizing, New Zealand stabilizing, but mostly it's just watch the dollar. Right now, the dollar's making the big move today. And let's see if there's any more. There's probably going to be all red on here. So 1.9 end of year, median forecast 1.9, 25 basis points. We know that. PCE inflation of 4.3% in 2022. I don't know the acronym of PCE inflation. I think it stands for it's all fudged numbers inflation. Look, the Fed just wants to show that we're not having 10% inflation. Whatever they do to do that, I don't believe it. But anyway, they're trying to show that it's not going up. Like I said, raising rates 7 times, I think that's just their way of saying, look, everybody, we're trying not to let inflation get worse. But with the PPI going higher, highest in 12 months, having one of the biggest jumps it's had in 12 months, that's not a good thing. Let's see here. Funds rate, we're seeing 2023 forecast, 2024 forecast. It looks like we're going to be on a 1 to 2 year rate hike cycle. This campaign has officially started today. Perhaps this is not great. The market might digest this and this could get worse. So here's need to know. In the longer run, Fed officials see the federal funds rate median at 2.4%. Interest rate decision actual 0.5. That was expected. They raised rates by 0.25. DXY whipsawed, we know, but it's pushing bullish. Dollar's getting stronger. Gold strength and Bitcoin weaken. Oh, okay. So let's take a look at gold. Gold, you call that strength? Gold is down. I see dollar strength, which means gold weaker, silver weaker, oil weaker. We're probably getting a big drop in commodities. We can check some of those commodity ETFs, FTGC, for example, pushing back down, DBB, pushing back down, DBC, pushing back down. Can look at oil, pushing back down. So dollar strength is meaning lower commodity prices. All right. Indices for the day. SPY is at least holding to positive territory. We were just a second ago, 5 minutes ago, we were at 0.14, giving back nearly all the gains. Let's go to the 1 hour chart and see what's happening. Remember, this 2 to 3 o'clock candle will be pretty important to watch. Intraday, watch and see what happens. This is the same thing with Forex. You see some dollar indecision, some dollar volatility. You'll see some 1 hour, candles we want to pay attention to. But for the most part, today's price action was gap higher, and today's Fed starts out by filling the gap. Now, is that, to me, I look at this as an opportunity where if there's going to be a time to be bullish, this is a perfect time to do it. Because if this is fill the gap and buy that dip, we will see if we can get back to these highs. And I don't know what's going to turn it necessarily, but tight stop loss is right there. This is just pure price action. So anyway, like I said, a couple more hours before Wall Street closes. Are we clinging to positive gains on the day, or is this just a reset? Not sure. And Powell is speaking in the next few minutes. So I want to see what old Papa Powell has to say, whether it's good or bad, if it's anything different than what we're reading right here in all these red real-time news events or highlights and headlines. So we'll figure it out. If you have any instruments you'd like me to take a look at, type them in the chat and we will take a look. Euro dollar still very indecisive. Not a ton of movement there. We're at 109.60 on the euro dollar. Dollar CAD, a lot of indecision, but we're trading at 27.60. New Zealand dollar pushing down on the day with mostly dollar domination here in the last few minutes. Aussie dollar, same thing. Really, the best trade right now is if you're long dollar Swiss, that's good. If you're long dollar yen, you're going with this extended move and this heavy bar count that's long in the tooth, that's fine. Look, eventually we're going to get a great trade. Eventually the dollar yen is going to be an excellent trade, and I am all for it. But that perhaps might come at a price that is, 120 all the way potentially up to like 124. Highs that we had back in, I'm looking at the highs back in 2015. Those highs are around 124. So is that where we're going to run? Maybe. Let's find out. All right, so take a little look here. Just getting a trade update. Come on. There we go. Excuse me. All right. Pound New Zealand. Sure, we can go over Pound New Zealand. Take a look at Pound New Zealand. Pound Aussie, Pound New Zealand. Take a look. Pound Aussie, Pound New Zealand. I was interested in buying this week directionally to go after these missed weekly targets. And so far, that's working out pretty nicely. There was about 100 pips up for grabs from Monday's session into this weekly pivot. I did grab a couple hundred pips on the Pound New Zealand right here, same thing. So Pound New Zealand, if I'm going to choose, I said this on Monday, Pound New Zealand is one of my preferred trades this week. Now, if we have, I mean, what I'm not loving is this isn't really making a dramatic move to the upside. So what we are noticing is we're seeing a kind of unanimous dip and drop in correction on commodities, which going into tomorrow's rate decision for the pound, remember, we just had a rate decision right now for the U.S. Tomorrow morning at 7 a.m., the Bank of England is coming out with another 25 basis points rate hike. So if that is the case, I'm still interested in Pound New Zealand going up to find this weekly pivot as well as this pocket. If we have a dip back down to this low, I think we can still buy it off those lows. And I've mentioned this, this is not a bad spot to start. This is not a bad spot to start, getting kind of dollar cost average into this trade and looking for a probability of this thing popping back up and finding this pocket overall. So I still like Pound New Zealand long. Just make sure that you're trading small enough that if you're going to let it drop to 9,000 or 8,900, you're okay with that. But structurally for right now, let's go to a smaller time frame, like a 1 hour chart. And this is what I'm potentially seeing here. So if the Pound New Zealand breaks, this is a pretty easy trade to watch over the next 24 hours or so. If we have a break of this area, something like that. So if this is going to hold this area, get up and break, look for a pullback here, and then go long. We've got a pocket. We've got our pocket back here plus our pivot combination. That would be about a 200 pip area of open space on Pound New Zealand. But I want to see that structure hold and break, right? If it just does this and stays on the left-hand side of the trend line, don't force those buy trades. Even if we want to buy it off equal lows, don't force a buy trade when the easier trade is this is our profit target, okay? So let price break this area and then go. And that's when you start stacking up orders and getting more aggressive on those entries. So that way you don't have to catch or guess at the bottoms. Okay? All right, pound US dollar, we're probably around 3,000 or so now. Yep, 1.3064. This retreated the last couple of hours. I don't have a trade running on pound US dollar. I know that we're back into this support level. 130 should hold. We're kind of stuck between a couple of pivots. But, this has been a really interesting channel that we've been able to trade here. Yearly pivot back in 2021. That might offer some near-term support. That's around 28.50 or so. So what I would be looking for on this pound US dollar, again, I'm not looking to fight dollar strength, not right now. But if we use this pivot as support, we could get a bounce here, look for aggressive trendline breaks, look to see if this thing responds bullish, and then take it back up in the channel highs around 134. So I said on Monday, because we have the rate decision for the dollar and the pound this week, this one is kind of crossed off the list because I didn't want to trade a bunch of noise if it's, strong dollar today, strong pound tomorrow, and then the whole candle becomes a big indecision candle. So we'll wait. Okay. All right. I'm just looking at the overall indices. They are still chipping away at those gains. The SPY is nearly back to break even. The Dow is now in negative territory. The Qs, which I believe were up at 2% at one point, they're back down into a red candle. The IWM is a Russell. Where's that at today? This is also giving back some of those gains. So Russell from the higher time frame from high to low, this is also in that 20+% correction area. So the Russell is down, from high to low, it's at 23% for the year. We're officially in full correction territory, bear market territory, if you will, once you cross that 20% threshold. So the NASDAQ and the Russell are both in bear market territory, and it's going to take a while to kind of, it either responds now and we get off these lows, or it's going to take a while to rebuild, small cap, mid cap, and tech. And I think it's probably the latter. I think it's going to take time to rebuild and base and all that good stuff. So, but the day is not over. Powell hasn't been speaking yet. He's supposed to be on the horn here in a little bit. I'm sure there's a link to stream it if you're interested. I don't like to listen to that stuff. I look for the headlines instead because it doesn't really help me trade if I'm listening to every word he says. The statement's already predetermined for the most part. There might be a Q&A with him, but I mean, what's he going to talk about? Inflation, rates, expectations for this year, next year, and then possibly chiming in on geopolitical tensions and uncertainty with Russia, Ukraine. That's it. We've literally been digesting the same information for the last 2 months. You know, when we started this year, we knew inflation, we knew rising rates, we knew tightening cycle. The only thing that was the curveball to us was this Russia-Ukraine political or geopolitical conflict. And we'll find out. I mean, there's more that comes to the table with, like, is China involved and is China supporting Russia and blah blah blah. It's like, I don't know. I just want to trade. So anyway, Paul should be taking the microphone here in a few minutes. So we'll look for some more headlines. It's 2:30. Any updates with our currency strength? Dollar still continues to run. In fact, this is probably the only currency that is really moving right now. I mean, everything else kind of froze in place. Swiss, the yen, still weak. The dollar is still sticking with that strength for right now. Right? So, but I mean, realistically, my P&L and Forex has not really changed a lot. My P&L and stocks has changed quite a bit. I actually lost about 50% of my gains for the day. At one point, I had a bunch of accounts that were up around 80K today, and now they're down to 40K positive. So I've lost about half of those intraday profits, but that's okay. I'll figure it out. So this is what I'm talking about here, just taking a look at everything. So at one point, this was up, $83,000, $84,000, $90,000, I think was the high mark of the day, and it's been retreating pretty aggressively. But I will continue to watch. All right. How are cryptos doing? Good question. Let's take a look. So let's look at Bitcoin, BTC USD. So Bitcoin pretty much gave back all the gains it had for the day. We're trading at 39,420. The high of the day was around 41,600, and we retreated off of that. Again, we're not doing any damage to these lows. That's one thing I've got to keep an eye out for. I've got chart alarms set on all these instruments, highs and lows. Look, if we don't take out a recent low, I'm really not that concerned. If we just have today's candle as a bunch of noise and it's inside of all these previous highs and lows but not breaking them, it's noise. FOMC, traditionally is a very noisy day. The market's got a lot to digest. It opens up the floodgates for volatility. Sometimes it's just intraday noise. Sometimes you wait for the daily closes. Sometimes you wait for the weekly candle. Gets a lot clearer. Go to the bigger time frames. Okay. Why the U.S. dollar moved so much when there wasn't? Yeah, I mean, I don't know, man. That's like asking, I don't know. It's like asking why the sky is different colors during a rainbow. It's like, I guess there's an answer to it, but it's just, I don't know. The market's got to do something, right? It's like, it's news. Well, what does this mean? Well, maybe the markets did not anticipate the Fed truly going with this year having 6 to 7 rate hikes. Maybe that's why the dollar's moving strong right now, right? If you remember, starting into 2022, we were told by the Fed that inflation was transitory. They're going to tighten, and they're going to raise probably 3 to 4 times this year and 3 to 4 times next year. So now what are they doing? They've changed it up, and they're looking at now we're going to raise potentially 7 times this year. Even though they're not going to raise to more percentages, it's just going to be more steady rate hikes. So again, I'm grasping here, but maybe that's the explanation where the dollar's like, we'll move because the Fed's, aggressively raising rates, 7 times versus 4 times. So instead of doing a quarterly increase, they're doing it pretty much every Fed meeting by 25 basis points. But like I said, the total percentage of where we're at doesn't really change. How many times in the last month, and traders know this in my trading rooms, how many times in the last month have we seen the whipsaw of that Fed tool? They projected 75 basis points and 50 basis points. Nope, they did 0, 25 basis points. It's been all over the place, So I don't know why the dollar's getting all the love today. I don't really care. Like I said, with my chart alarms, I mean, you notice in this session, I haven't had a single chart alarm go off. I've got probably 200 chart alarms sitting in all these different instruments between Forex, stocks, cryptos. It's like no chart alarms have gone off. Okay. I think the ones that just went off at the very beginning might have been like within the first couple of minutes of the first announcement. So what just activated was my dollar yen at 118.45. That was an hour and a half ago. My pound Swiss was earlier today. Airbnb was up today. All those stocks that were up today are probably retreating. And currency-wise, we just know the dollar's getting stronger. That's about it. Okay. Juwan, you're probably going to eat that comment later. You say that now, but you wait and see. You wait and see. You want to talk to me about efficiency, you come back to me in a couple weeks time or a month or whatever, and you tell me where the dollar yen is. Because I would be very surprised if the dollar yen is not making its way back to this pocket, which would be the efficiency that you're questioning, and this 200 EMA, which is what I've been planning on from the daily time frame. The market doesn't have to be efficient all the time. The market can create these inefficiencies and then rebalance later, right? So, don't say it's inefficient or it's broken when it's probably going to come back in balance. It's just not now. So, like I said, it's not over yet. I've traded these markets long enough to be surprised. I mean, I've seen months and months of, holy crap, I can't believe how long that trend is. And then months and months of it went right back to where it started. It's just how are you positioned during the entire move? Because if you're on the wrong side of it, it's no fun, right? But if you're trading it, it's a great time for all that extra volatility. Oh, the Fed's been a mess. I mean, I think this has probably been one of the more unorganized drips of information into the market because so much has changed over the last 4 or 5 months. We went from, inflation is transitory to it's not, to we're going to have to tighten, to we're going to raise rates a few times, to now look at where we are. I mean, the whole narrative has changed, and it just kind of getting perpetually worse to see, how does the Fed really aid the situation and not make it worse? And I think that was the biggest concern, is the Fed, can it exacerbate the situation and make inflation worse, make prices go up again, and create tons of volatility and uncertainty in the markets, and then we have a recession on our hands, right? We were talking about this morning. The 10 and 2 year Treasury yield, right? Let me refresh this and see, is this changing in real time? So it's still sitting at 0.3%. I can share this chart with everybody. I shared this in trading rooms this morning. So this is the 10-2 Treasury yield. Keep this one handy. Treasury yield spread. There's the link. If that goes to 0 or below 0, that is the inverted yield curve. Oops, I went over characters. Let me see if I can just share it. Okay, so that link should work. If you can click on that link, keep that chart handy. If this goes to 0 or below 0, that is your recession indicator. 10 out of the last 11 recessions have been predicted by this inverted yield curve. So we're not at the lows that we had back here when we had inverted yield curve back in August 2019, which we did face the shortest recession ever in March and April of 2020. But it was there and it was predicted properly. That was, again, kind of the forecast. So maybe we don't invert, but we just have a bunch of wild stuff going on right now. Euro Swiss, Brad, sure, let's take a look. Euro Swiss we looked at earlier. Euro Swiss is trading at 103.63. We're back up towards a nice price gap. In fact, I had this on the 1 hour time frame. I talked to traders this morning about this. This little green box is a price gap from February 22nd. And I think we're very likely coming back to hit it. This is where I was leveling in some more, Euro Swiss trades. I added some more over here. I bought in at these bottoms, and I'm looking at some decent profit here. Hopefully, we're going to head up higher into 106. That is my profit target around 106 to 106.50 for right now. So I'm just going to stay the course on Euro Swiss. I know I've got traders that asked me this morning, Chris, I'm in like 500 pips profit on Euro Swiss. What do I do? If you're having to ask yourself that question, if you get nervous or anxious about having these profits, you might be better off just protecting them and then getting back in and starting over again. But I try to stick to my trading plan. And if I take partial profits, that's fine, but I have to be willing to get back in and participate with my bigger picture. This is my bigger picture. I want the Euro Swiss to continue to rally up to 106. So I'm doing my best to buy dips and still add to my positions. Okay. Jerry says it'd be a miracle if we don't tumble into a deep recession. Yeah, but you know what? We've avoided pretty much every. You have to remember, this is no longer a free market for the most part. I mean, we have been artificially engineering gains and asset appreciation for the last decade, and the Fed's pretty good at it. So until the Fed is not going to support the markets and provide a safety net for the markets, until that is done, until they can no longer do that, guess what? This will always be look to the Fed to save the market. Look to the Fed to back up the market. Look for the Fed for a backstop. And I looked at this morning, and this is what's crazy. Look at a monthly time frame on the SPY. Look at the monthly time frame on the SPY, any of these indices. I mean, you just don't look at this chart and think like this is financially healthy. There's nothing about health in this stock market at all from that base in 2009. When we created our, financial crisis, 2008, 2009, the Great Recession, from that low to these current levels, we have had nothing other than this broadening formation was about the only real volatility that we had that was balanced, because this was an overstretched run and this is an overstretched run. Okay? And what is scary is there's nothing that tells us or guarantees us that this market has to go higher. Absolutely nothing has to tell us or guarantee that it goes higher. This market could go nowhere for the rest of the year, right? And traders are wondering like, well, how do we make money in this environment? We've got inflation, we've got, stagnant wages. How do we make money in this environment as an investor? You don't. You got to learn how to trade it, right? You got to be buying low and taking profit at highs. You got to be trading options. You got to be trading forex. You got to trade. You can't just sit and hold. Like buy and hold might not work in a stagnant environment. Buy and hold might not work in this environment until prices ultimately do go higher. But maybe our growth phase is done for right now. Maybe we're putting the kibosh in that right now. So a deep recession, I don't know, because I think there are the tools still to avoid it. I really do. And I'm not saying it's good. I don't think it's real, but there's a lot of things we have seen where the market doesn't have to make sense. It doesn't have to be rational for everyone to think like there's no way. Look, if everyone thinks a recession is coming, guess what probably won't happen? We probably won't have a recession, right? Everyone was concerned about inflation in 2020. We didn't really get it to stick until this year. So that whole sentiment idea, like the whole herd mentality, if everyone thinks there is a recession coming, okay, fine. Maybe it's going to slowly make its way into the market. But I don't see it crippling the market unless every investor and every consumer is going to officially make the transition to say, I'm not going to spend any money. It's time to start saving. I'm going to pay for my mortgage, pay for my food, and I'm not buying stuff. If that happens, then absolutely the contraction is real, and that's what we should see reflected in the stock market, right? But I think right now everyone's being told, you got all this money. Your house is worth, 20% more than it was. You're sitting on equity. Take out a loan and leverage it, So we've seen the market do wilder and crazier things before. So like I said, this is not a free market. This is the guise of a free market. This is the illusion of a free market, but we're very much in the backstop of the Fed does whatever it can to keep the markets stable, liquid, reassured, and that is why it is driving people crazy. It's driving rational thinkers crazy because there's no reason for us to be at these highs. How can you have growth in tech stocks be 80% down for the year? Some of these ridiculous stocks that were unicorn stocks and they were untouchable, and they're down 80% for the year. Some are below like IPO levels. Like, how is that possible? And yet you have another section of the stock market that's making new highs. Your energy sector, your financials are doing really well. I mean, it's just a game. You got to play the game. And at the end of the day, it's only how well you can trade it with good equity management. That is it. If you screw up in equity management, you will never survive as an investor. So I don't care what I show you, what I tell you, what I teach you. If you don't survive with good equity management, you don't stand a chance. So whatever you do, whatever positions you take, it's how much you are willing to risk, how much you win, how much you protect, and how long you can stay in the game and survive. And it sucks because that means you have to throttle back your expectations for gains and earnings and profits. But at the same time, if you actually care about the downside, you should always be conscious of the downside. I'm always risk first. Like that's my first priority as a trader. I want to manage risk. The profits, the gains, the returns, those come as a byproduct of managing risk properly. Maybe that's why I don't make hundreds of percent a year, but I also don't have huge drawdowns. All my, managements or all my drawdown positions are pretty manageable, So anyway, the market is liking what Powell is saying. Dollar crosses back to where it started. Okay, let's take a look at that really quickly. Dollar index, daily time frame, go to the 1 hour chart. Let's see right where this news broke. So let's go 30 minutes so we can start with 2 candles here. Here you go. So here is your third. This is really interesting, and this is totally common for the Fed right now. These FOMC rate decisions intraday, 30 minutes of, oh my gosh, the dollar's up, and then 30 minutes of what? And we're about 15 minutes away from closing this candle. But what goes up comes down. All it is a big noisy day. But the markets are saying something like, hey, it's now back up 0.6%. It was up 1.4 down to break even for the day, and now it's back up 0.6. I've watched, if you take a look, I showed you a second ago, I was up 90K on the day. I was down to 38K, and now it's back up to 65. So again, major fluctuations intraday in these stocks. It's okay. Right now, I'm sitting around the same levels in Forex, which is fine. But I'm going to keep monitoring this stuff for the remainder of the day. So have we done anything massive on the dollar index? Have I broken any chart alarms? Have we broken any chart alarms? No, we have not. I'm going to put this at the low of the day for FOMC. This is 12,335. I'll put FOMC day lows. I'm just curious, for my own peace of mind, just to see like where price is going today. Because if it's up for 30 minutes, down for 30 minutes, and then the market has an hour to close in Wall Street and 2 hours to close for Forex, maybe it's just a big noisy day, right? And then tomorrow, like if it closes here for tomorrow and starts to rally for the remainder of the week, then we can look at trading this on Thursday and Friday. But if it doesn't break this high and it closes here with indecision, maybe we try to be pretty neutral. If it's indecisive on today's candle, we have a high above, we have a low below. Do we get a break to the downside? Do we get a break to the upside? What is the point of trading all this indecision if price isn't going to go anywhere, right? If the dollar's not going to make a move up or make a move down, all this is going to do is confuse us. So let's focus on the open spaces, yeah? So that's what I'm going to do. All these chart alarms are set. Same thing on cryptos. I think that 30-minute chart is a really good one to watch right now, just to see how noisy the news has been. Okay. All right, let's take a look. Let's look at crypto and the same thing, Bitcoin. So what was a 30-minute down candle is now getting aggressively bought back up to kind of retrace back to where it started. Let's go to the SPY, 30 minutes. This was a down candle. Now we're pushing back up right where it started. So any comments out of Powell? Is anybody reading this stuff? So Powell, let's see what this guy's saying. He's got a lot of headlines here. I'm just going to read the red. Lowering the balance sheet will also play a key role in tightening policy. Fed made good progress on the balance sheet plan in this meeting. Consequence of Russian invasion is quite uncertain. The Ukraine war may have ramifications on trade and supply. We're concerned about the possibility of increased inflationary pressures. Likelihood of recession isn't extremely high, so that's Fed, Papa Powell trying to reassure the markets like, oh, it's okay. It's okay. No, we're not going to have a recession. I believe that oil will face some short-term upward inflation pressures. It's very possible that will move more quickly as the year progresses. That's interesting, that they could be accelerating that rate curve or that rate campaign, maybe 25, 25, 25, as inflation is kind of maybe more under control. The Fed looks to ramp it up a little bit to kind of peak out. I would be willing to go on record saying this. I would be shocked if the Fed funds rate exceeds 3% in the next 2 to 3 years. I would be shocked. I can't tell you the last time that the Fed funds rate was above 3%. I've been trading Forex since 2008. Pretty sure I've always seen it between like 2.5 and 0. But let's check. Let's go back and see what the news history shows us. So let's go back a long time. Let's go back to, this is 2012, race to the bottom. There we go. So this was before I started trading. I started trading in 2008 when the Fed rate was 3% January 2008, 2.25%, 2%. And by the way, I was so new, I had no idea what any of this stuff was. So it's no wonder that wasn't on my radar. But look at the difference. 2008, 2009, guess what? Financial crisis. What's the Fed doing? Cutting rates like crazy throughout all of 2008. Looks like a very similar playbook that we had in 2020, just way faster, right? 2020, what did we do? We went from 1.75 to 0 in a matter of 1 month. This at least took time. We cut from 4.25 I mean, December 2007 was 4.25. We cut it all the way down to that 0% in December 2008. That is insane. Essentially, like a 2-year period, we cut all of our rates to zero. Stimulate. So my point is, I can't remember when the Fed was at, over 2.5%. I'm literally going back to the days before I even started trading, and that was the Great Recession. And here we are, like all this fluctuation between 0, 0, 0, 0, 0. They start to raise rates back in 2017-18. From 2017-18, that was Yellen's term for the Fed. They raised rates 8 times over a 2-year period. And then what do we do in 2020? Emergency cuts again. And here we are starting the whole thing over. So that to me is like the yo-yo of the Fed. We'll go as high as like 2.5, 3%, but we typically don't go higher than that. And again, I mean, given the debt load and the debt cycle, probably not something we can do. We're going to have to forever fluctuate in here until, I don't know, we have to service our debt differently, I suppose. Right? All right. Anyway, I'm going to set a chart alarm here, intraday SPY high, because I've got to head out of the office here in a few minutes. So intraday highs on the SPY, and then intraday lows right here at 424.79. I'll put FOMC intraday lows. I'm going to change that one to intraday highs FOMC. So that chart alarm is set. This chart alarm will be FOMC intraday highs. There. So I just want to see, as I'm away from the office and Wall Street closes at 4 o'clock, are we anywhere near the highs again? Are we flushing back down to the lows again? All we really dealt with during this entire session was noise, right? Like, look at the difference in emotions of just watching, intraday price do nothing. I didn't have any chart alarms go off during this period, right? All my alerts were 11, 12 o'clock today, a couple hours ago. I have hundreds of alerts, and I didn't have anything activate. That's just noise. Is the Fed saying anything crazy? Not really. So inflation is still expected to fall in the second half of this year. Because of the war, supply chains may get more entangled. I anticipate that inflation will remain high until the middle of the year. Inflation will be high this year, but will be reduced in 2021. That's got to be a typo. It's 2022, bro. All right, we're looking for month-to-month inflation to reduce. Monetary policy starting to weigh on inflation and growth with a lag. We'll see more of it in 2023 and 24. Rate hikes have been factored into financial conditions. Brent crude futures settling in at 98.02 a barrel. Fed is appropriate to move more quickly. They will do so. Fed raises the main rates by 25 basis points. A median forecast to 1.9 by the end of the year. All right, so that's all about the same. Yep, so that's it. And ladies and gentlemen, that is FOMC. Lot to talk about. Really, just a lot of noise. We have a plan to gradually raise interest rates over the course of the year. Right. And the plan is you confuse everybody with this watch tool. You drive these forecasts all over the place. You keep the most vanilla statements every time you do a press conference or print a statement for FOMC minutes. And what are we supposed to do? Set a bunch of chart alarms and figure out how to trade it. If you tried to, get rich today trading FOMC, I don't know how you did it. Unless you were willing to trade a 1-minute time frame, get in, get out, try to grab some pips, grab some profits, because it is clearly a noisy day. Okay, Alibaba's up 33% today. Hey, now we're talking. That's a good thing, right? Alibaba's up big time today. Awesome. You know what? Holy crap. Man, that is an excellent chart. Please tell me that somebody bought Alibaba like low as heck. Man, what a great freaking trade that would be. 70 some. I mean, we darn near came back to the 2016 lows on Alibaba at 60 freaking dollars. Unbelievable. I'm not going to chase it. The one trade I have going that's kind of benefiting from this China reassurance that they're going to support the markets again versus letting them burn is Baidu. Baidu is like the kind of Google. Alibaba's like the Amazon, and Baidu's like the Google. So anyway, that's crazy. Up 34% for the day. That is impressive. And then Baidu is up 33.5% as well at 144. Oh my gosh, Baidu is in profit. Ugh, Unbelievable. Looks like this guy is going to be taking some profit this week on Baidu. Um, actually, I might not even get assigned. I'm looking at let me look at my price right here. So on Baidu, if price somehow gets above 155 by the end of the week, I don't know if that's going to be the case. That would be freaking awesome if it does. Baidu, if we get above 155, I will close out for, let's see here, 141.63 minus 155, and that is for 500 shares. That's not right. I wish that was right. 141.63 minus 155, 500 shares. There we go. I'll make almost $7,000 in the last month or so that I've taken the trade. And man, it could have been way better. I didn't get I had a put that would have, if price hit $100 on Baidu, I was very close to getting that full like $50 long put. And I didn't get it. It sucked because I ended up closing out for like $10.50, which was way off. But I mean, I had a chance to grab $45 on the long put, which would have put me way ahead. But anyway, if anybody bought Alibaba, awesome. Congrats. One that I went long on today is FXI. FXI bought shares at 30.80. This is a large cap follower for China. We're sitting back here at multi-year support levels, and I took a stab at it. It's not going to be as fast. It's not going to be as volatile. But if we're getting a broader recovery in China large cap, Baidu could be great. Alibaba obviously could be great. The tech market across the board could have a nice recovery in China. Let's see it. And I don't know. I don't know if that's going to also like drip into the U.S. market. Maybe, maybe not. But look at where we are. A lot of volatility today. I will say that before we go. I mean, this was as low as break even for the day. We gapped higher, by the way. So the SPY gapped higher, gave it all back during FOMC for the first 30 minutes. Powell saying something the market's enjoying right now. At least it's back up towards 1+%. Dow's up as well. VIX is all over the place, but is down on the day as a whole. Let's go to the daily for the VIX. And it is down on the day. We probably had a big jump in VIXM as well. So VIX is getting pushed back down. VIXM is my volatility hedge that's pushed back down. I was thinking I was going to lose the stock this week above $34. That doesn't seem to be the case. VIXY getting pushed back down. VXX getting pushed back down. Wow, look at that crap. I don't know if that's an accurate feed. If that was, I didn't have that chart alarm go off. Anyway, crazy stuff, right? Cool. Any questions? Mercury's asking, what does it mean for the euro dollar? Well, look at the dollar index. Let the dust settle on the day. This chart alarm has not activated. This is what I'm watching on the euro dollar. This is what I'm watching on dollar index. If the dollar index breaks below this level around 12,306, I think that we have put in a near-term top on the dollar, and the dollar will retreat to allow the stock market to rally. All right? But my first instinct on this chart from the technicals is that we broke out of this level right here. So we are up, we are pulling back, and I'm looking for this to continue to go higher. If the dollar index goes higher, I think that spells trouble for the stock market. I think the 10-year note continues to rally to 2+%, 2.2, 2.3. If the dollar index gets stronger, that means weaker commodities, weaker stocks, dollar gets stronger till we hit those multi-year highs, and then I think the dollar gets weaker from 12,600 or that that major resistance area. So all I'm saying on this chart is this is a potential breakout point where we have price up, looking for a retracement. If it responds to this past resistance becoming support, look for dollar strength. If it closes back below 12,306, stop above, go after dollar weakness, and see if the stock market and the commodities recover because of it. But we have seen a big drop in oil, a big drop in gold, a big drop in, I think nickel is coming back to be traded for the first time today. In like 6 or 7 days after the London Metals Exchange froze it because it went up like 100% in a day and all these shorts were caught off guard. So anyway, but here we are today. We've been knowing that this is going to happen for a month. The Fed finally raised rates. And now we're talking about maybe a 6 to 7 rate hike campaign from the Fed, targeted at 1.9% by the end of the year. I don't know how they get that number. I'll just say it's 2%. Probably that window between 1.75 and 2% by the end of the year if the Fed stays on what they said today. Okay. Oh, there you go. About 500 shares on Alibaba, but it was on a demo account. I mean, Great demo trade. You can trade fractional shares on Alibaba, can't you? That's a real trade, man. That's just a good price. I mean, would I have bought it there? I probably would have started with a credit spread, honestly, but I don't know. It's just a tough one. It's a fallen knife. I mean, hell, the thing broke to like 85%. So it's tough to buy it, but now you're now you're wishing you did. So anyway, but Baidu's looking good. I want to see if the broader market's recovering. SPY's up a little bit. We're flirting with that 1% level. Some other ones that I'm still going to watch really closely. Coin's up a little bit today. OKTA, this one needs to have a pretty nice recovery. It's getting beat up pretty badly here, but there's some strong support at 150. Twitter, I might look at losing the stock this week at $35. It's going to be close. Under Armour at 15.50 or so. It's at 14.95. It's going to be close. We have some energy plays. CTRA. We have some SLB, which is down hard. Like, this is good. I'm actually kind of happy to see SLB going down because I'm going to buy the dips and try to lose this thing at a better level. We already made $7.40 a share on SLB in the last couple of weeks. So I would like to do that again. Okay. All right. Sounds good. All right, everybody. Hey, that was fun. Whether, you got a lot of trades in or not, or you just watch P&L fluctuate all day for the last hour, it's better to do it together than to be all confused and not know what the heck's going on. So we dissected the news. This is what we said we're going to do. Try to find some real-time news to, see what the market's thinking. But what we should be doing is setting chart alarms, trading our price action. Here we go. Fed swaps predict a 75 basis points raise over the next 2 meetings. So whether that's a 0.25 and a 0.5, we'll find out. We can take a look one more thing on this Fed tool. Let's go to May of this year and see what the market's forecasting. Right now, it's about a 50-50 split. So 44% to 53%. The higher percentage is looking at a 50 basis point rate hike. And over the next month, actually 2 months now, month and a half, I should say, which is weird. I don't know why they're going to have it May 4th, but whatever. Guess summer vacation starts early for the Fed. But they're looking at maybe that 50 basis points hike comes first, and this would be the 0.50, and then going into the summer, maybe having that 25 basis points in June or July. So we'll watch and see how that drama unfolds. Right? But we'll be back tomorrow for Flex at 8 o'clock, Equities on Demand at 10. See you traders in the trading room as usual. Thanks for being with me today. It was a lot of fun. Certainly happy that there's some resiliency and rebounds, because it would not have been a fun session to just watch for an hour, watch my entire portfolio just take a big nosedive for the day, especially after being up 90 grand and then drop to zero. But it's back up towards 75. So all in all, no damage appeared to be done for the day. Ish. I mean, it's flattened out a little bit, but I'll continue to watch. And tomorrow's a new trading day. Okay. All right, everybody. I'll see you in Flex tomorrow. See you in Equities on Demand, same time, same place. We got lots to manage this week. As usual, chart alarm set. Watch those pairs. I'm going to look at dollar yen. Is dollar yen doing anything? Where's it at? It was up to 119. It's dipped a little bit off those highs, 119 and change. Okay. All right. So let it do its thing. Pocket level all the way back here towards 116.45. I'll set it at 116.40. So that would be a nice little daily pocket breakout filled. See if that fills. And then that big round number at 120. All right. Cool beans, everybody. If you would do me a huge favor before you duck out, hit that thumbs up button for me. Like the channel, support the channel. The algorithm appreciates it. Helps me get more views and followers out there on the YouTube channel, and goes a long way. All it takes is that split second, click that thumbs up button, shade it in. There you go. Happy trading, lots of profits, everybody. See you tomorrow in class. Okay, and then I'll see you Friday. We'll be back for the Pulver Report live on Friday at 9 a.m. Okay. All right. Bye, everybody. Take care. Bye.